Hey everyone, welcome back to the channel. My name is CJ, and today we're going to answer the question, did Robinhood manipulate the market? To that end, let's talk about what Robinhood did to get into hot water, what they did wrong, and where that leaves us as investors. Oh, and hit that like button and subscribe to the channel if you find this content useful and want to keep up to date with my future videos. Oh, and one last thing, this is not financial advice. This is for educational purposes only. With all that out of the way, let's dig into it. So what did Robinhood do to infuriate individual retail investors? Before we address that, if you're watching this video, you're probably aware of the meteoric rise of the stock prices of companies like AMC and GameStop. But if you're not familiar with the situation, I have another video that explains more in depth the situation with GameStop and the short squeeze, and I would really recommend you go check that video out before continuing with this one. It's really important to understand that for the context of this discussion of Robinhood. Last week, Robinhood halted buy orders on a select number of stocks, including GameStop and AMC. Robinhood users only had the option to sell their shares, leading to outcries of market manipulation and treating Wall Street preferentially over Main Street. Notable critics of Robinhood were Barstool's Dave Portnoy, Chamath Palihapitiya, Mark Cuban, and every single investor on the subreddit WallStreetBets. There's even a class action lawsuit now against Robinhood for halting buy orders. The next day, Robinhood allowed users to purchase these restricted shares, but in reality, they only allowed users to buy one new share in these companies. So basically, you couldn't increase your position with any meaningful amount of money whatsoever. In an instant, Robinhood seemed to go from democratizing finance for all to restricting it when it suits them and their financial institutions best. It seemed like Robinhood went from supporting a free market for all to a free market for some. There were accusations of Robinhood selling stock directly from users' accounts without their prior approval. Robinhood vehemently denied these accusations, but it left these users confused at the very least as to what happened with the shares that they owned. So now we have confused and upset customers with good reason. But that's not all. The most concerning accusation was that Robinhood was intentionally preventing buy orders at the behest of Citadel Securities, which is their largest purchaser of their order flow. Have you ever wondered how Robinhood can offer zero commission trades? It all comes down to the practice of payment of order flow. Basically, when you buy a stock, Robinhood takes your order and sells it to a larger trading firm such as Citadel Securities, who then executes your order. Keep that in mind anytime any company offers you something for free. If you're not paying for the product, then chances are you are the product. Citadel Securities is an independently managed subsidiary of Citadel, which is a hedge fund based in Chicago run by billionaire Ken Griffin. Citadel, the hedge fund, recently supplied $2.75 billion in relief to Melvin Capital, which is a major short seller of GameStop stock. And at first it seemed obvious that Citadel kindly requested that Robinhood prevent buy orders for selected stocks in order to protect their multi-billion-dollar cash infusion into Melvin Capital. But was Robinhood acting nefariously? Were they intentionally preventing buy orders in order to help out their hedge fund buddies? After the trading day was over, Robinhood outright denied these claims. They sent an email to their customers explaining the real reason why they had to halt buy orders. Because there's a lag between the time an investor takes a position in a stock and the cash actually transfers hands, Robinhood and other brokerage firms need to keep a hoard of cash on hand in order to help finalize these trades with entities called clearinghouses. Basically, Robinhood is required by law to deposit cash with these clearinghouses while a transaction is finalized. The more buy orders there are for volatile stocks like GameStop and AMC, the more money Robinhood has to deposit with these clearinghouses between that lag when the transaction first starts and the transaction is finalized. And in the past week, these obligations have risen tenfold for Robinhood. So we're talking about hundreds of millions of dollars that Robinhood had to deposit with these clearinghouses. And this is the real reason why Robinhood had to stop buy orders for these volatile stocks. They weren't showing preferential treatment to market makers. They simply didn't have enough cash on hand to complete these transactions. Robinhood's CEO Vlad Tenev said that some of these actions were preemptive. So it's not clear that they needed to take the precise action that they did when they did, but it was clear that their financial position needed to be shored up, and it was definitely a financial concern for the company. Okay, so what did Robinhood actually do wrong? For now, it looks like Robinhood is clear of the accusations of an intentional market manipulation. But by preventing buying of these meme stocks, Robinhood inadvertently forced the hand of some scared retail investors who actually did sell their positions. The immediate reaction of the stock was that it went down. Inadvertently, they provided a bailout for these short investors that desperately needed the price to go down. It reeked of market manipulation, and you can see the coincidence of it all is a little fishy, but right now there is no evidence that Robinhood made any illegal activity or wrongdoing. Secondly, Robinhood destroyed any semblance of trust that they might have built with Main Street. Their response to this fiasco was terribly managed. At first, they simply claimed that due to volatility, they were preventing buy orders for these meme stocks, insinuating that they were trying to protect their customers. It took them a whole day to communicate to their user base that they had fiduciary obligations to the clearinghouses. Their brand was destroyed, or nearly destroyed, due to their inability to communicate the real reason why they had to halt buy orders. I don't know what they could have done or should have done differently financially. As I said before, the CEO claimed that they acted preemptively with some of their actions, so it's possible that they could have delayed some of their actions. But it's downright offensive that they treated their customer base like toddlers, even if they do claim to be that way on the internet. These people have real money at stake, and they want to know why they aren't able to trade in a free market. And Robinhood is far from an innocent party, as we can see from their checkered past. In December 2020, Robinhood was fined $65 million by the SEC because they were misleading their customers about the main way that they make money, which is by selling their order flow to big market makers like we talked about earlier in the video. They're gamifying and glorifying day trading, which can be extremely dangerous to the financial health of individual investors. There have been inconsistent service outages for Robinhood's app in the past, and unfortunately, somebody committed suicide last year due to a misunderstanding of losses in his account. All this is to say that Robinhood is in a really tough spot right now, but they're not going to get any sympathy from me. I don't have any specific recommendations for buying or selling any of these meme stocks, but what I would recommend is that you transfer your money from Robinhood to another brokerage firm. I personally wouldn't put any money in a Robinhood brokerage account because of this mess that they're in and because of their track record of past misconduct. There are some other popular tech-based brokerages like Public, SoFi, and Webull that are pretty popular. Or you might want to try a more traditional brokerage like Vanguard or Interactive Brokers or TD Ameritrade. One lesson we can take away from this Robinhood fiasco is that it takes a lifetime to build a reputation, but only a moment to destroy it. Personally, I'll be interested to see what the rate of attrition is from Robinhood to other apps. Reputationally, I'm not sure Robinhood's going to be able to recover from this. They just spurned their entire user base due to miscommunication. And as we've seen, that user base is going to collectively hold a grudge like they've collectively held GameStop shares for a long time. At this point, how could a user even trust Robinhood? I hope there hasn't been any illegal activity that's deprived Robinhood users of money in their pockets. Well, since you've made it this far, thank you by the way. You'd probably like a refresher on the GameStop short squeeze situation. I have a video of that over here. Or you might like my curated playlist of investing videos that I've done in the past. Please like the video and subscribe to the channel if you found this video helpful. Let me know in the comments below what you think of the Robinhood situation. Thanks for watching everyone, and I'll see you next time.